Hey there, welcome back to another Canadian real estate news recap here on Bald Prairie Real Estate. My name is Matthew Pfeifer. I'm a real estate agent in Regina, and that is my trusted assistant, Matilda. If you're out looking to rent something in Canada, you know how hard it is to find something and how expensive it is when you do find something. That's why this week we're going to be talking about the CMHC rental report, where they said right now in Canada, this is the worst rental market we've had in over 2 decades. Plus, I'm going to talk to you about the difference between foreclosure and power sale. A lot of people are talking about that, but don't understand the differences. Plus, a whole bunch more really interesting news articles. Toronto's vacant home tax kicks in right away. We'll be talking about that. But before we get into the news, I got to give you another terrible bad dad joke, and this one is an inflation-themed joke. I told my boss last week I need a raise because 3 companies are interested in me and they keep calling me. He said, well, which ones? I said, the gas company, the electrical company, and the water company. If you have a terrible joke that I can use in a future episode, put it in the comments below. Let's get into the news. Let's start off talking about foreclosures and power of sale, because a lot of times people will use these words interchangeably or say that they mean the same thing, and especially for an owner, they absolutely do not. We'll start off by talking about power of sale. Now, of course, both these come up when somebody's behind on the mortgage and the lender decides to either go through this power of sale process, which is where they're going to go and force the sale of the home. The difference for the owner in this situation is, though, that if there's any profits left over after all the mortgage has been paid out, any expenses, real estate fees, legal fees, etc., the owner is actually entitled to those profits. So there may be some money left over for them after this is over. Whereas when you go through a foreclosure process, that is when the bank takes over full control of the property. So they take over the title, and the previous owner is not entitled to any profits left over. So the bank is going to keep all of that money. Now, the power of sale and foreclosure process in Canada is one that takes a long time. Power of sale is going to happen a little bit quicker. Even still, you'd be lucky to see that happen in about 6 months, whereas foreclosures typically take a year or more in Canada. Next up, we're going to talk about Toronto's vacant home tax. Now, this video is coming out on February 3rd, and if you live in Toronto and you have not filed the declaration to say whether your property is vacant or not, well, then you've missed the deadline and you're up for a fine. Of course, as soon as I finish recording that video, then the City of Toronto announces that the deadline has been extended to the end of February because nearly 15% of Toronto homeowners didn't even file the declaration. Now back to the video. Let's quickly go through this and what this all means. The vacant home tax is a 1% tax on any property that is left vacant. So the value of the property, 1% of it, which you have to pay as a fee to leave that property vacant. Now, there's a lot of exemptions. So for example, if somebody has to go through medical treatment, they're leaving the place vacant because they're going through a renovation, or maybe somebody needs long-term or medical care where they're going to be away from the home a long period. There's a whole bunch of other exemptions, but those are kind of some of the big ones there. This, of course, is modeled after Vancouver's vacant home tax, which was put in, I believe it was 2017. Now, at the time, the Vancouver City Council had estimated that there was about 10,000 quote-unquote underutilized, and that was their way of saying vacant homes. And this was the idea where they would force people to put these either up for sale or into the rental pool, which would alleviate vacancy rates and rent prices and home prices, etc. They then revised that back down to about 2,500, and then it was a few years later about 650. So they either grossly overestimated how many people were leaving their home vacant, or potentially there was people that found a lot of exemptions. There absolutely were a lot of those in the Vancouver case as well. But when you look back on this, Vancouver's vacancy rate has hardly changed at all since this was put into place. And of course, Vancouver home prices have increased a significant amount since 2017. We're going to have to wait and see what happens here in the Toronto case. But this is often more a political policy than something that's strong economic or real estate policy. This third topic here is about a Vancouver condo high-rise that was proposed to be built, that they're now no longer going to have it as condos and social housing, but it's going to be entirely rental. And I actually think this is something we're going to hear a little bit more of in the short-term future. So in this case here, I'm sure the developers looked at this and went, wow, we've seen a significant drop in the amount of buyers maybe looking for condos like this, and we're going to struggle to sell this, but there's a significant rental demand. So that's why they switched the project away. Now there's about 217 rentals instead of the original about 83 condos and 50 social housing units. In this case, of those 217 units, about 50 of them will be below market rent. This, again, I think is something we're going to see a lot of as developers see the demand for buyers reduces and the increase in rentals. You're going to see projects shifting around like this in terms of where they're focused. Topic number 4 here, let's talk about interest rates on mortgages in Canada, because there's a really interesting phenomenon happening right now, and that is that fixed rates are not only cheaper than variable rate mortgages, but significantly cheaper. And usually we see variable rates are the cheaper rate because you typically will pay a premium to know that your payment isn't going to change for the next 5 years or however long your term that you sign is. Right now, you're seeing 5-year fixed rates in Canada below 5%, something right around 5, but you're seeing a lot of options below 5% right now, whereas variable rate mortgages are 6 to 6.5%. That's probably the biggest spread we've seen between variable and fixed in a really long time in Canada. Now, for those that don't know, variable rate mortgages, that is set on what happens with the Bank of Canada. So when the Bank of Canada changes interest rate, that's when the variable rates change. The fixed rate market, that is set on what happens with the bond rate. So as bond rates go up and down, then fixed rates will go up and down as well. These next two articles here are talking about the rental market in Canada and specifically CMHC's Canadian Rent Report. And I want you to remember these two articles the next time somebody tells you, oh, no worry, there isn't a shortage of homes in Canada. And then they'll proceed to give you whatever reason, whether it's construction versus new household formation stats, etc. Well, the numbers here contradict that directly. So CMHC's report looking into not only the price of rent, but how competitive the rent market is. In this case here, we know that the price of rent has continued to skyrocket in Canada, now at all-time highs. And we're seeing cities, for example, like Halifax, that are quickly climbing the ladder to become one of the most expensive rental markets in Canada. According to the CMHC report, Halifax actually saw the largest year-over-year increase in Canada. Now, along the same trend here is vacancy rates in Canada. That is, of course, how many rental properties are vacant. The lower the number, the more competitive the market is going to be for those looking for rentals. And of course, the higher the prices will be because landlords can charge more when there's fewer options for renters. And right now in Canada, we're seeing vacancy rates below 2%, making it basically the lowest we've ever seen in Canada. Only a year ago, that number was closer to 4%. So this is a significant drop in the availability of rental products in Canada. Those purpose-built rentals, that's where we're seeing some of the lowest vacancy rates. Not only is there not very many of them available, we're not seeing very many of them built in Canada right now. That's an area that has really stagnated, and that is due to a whole host of factors: government bureaucracy, fees, taxes, the cost of acquiring land, the cost of materials. All of that makes it very expensive to build purpose-built rentals. And now we're seeing some of those issues that we have, not only with an increasing population, but stagnated rental construction causing low vacancy rate and sky-high rental prices. This is an area that the government of Canada, not only federally, but also all the provincial, municipal governments are going to have to get together and find a solution to this, because this problem is not going to solve itself. And in a lot of ways, it's tough for the market to solve this due to all those factors and, of course, the costs. So unless we see a significant commitment from all levels of government, both financially and in political will, we're going to continue to see low vacancy rates and sky-high rents in Canada. Did you know that if you're looking to buy a house in Canada or even sell a house in Canada, and you want to have a fantastic real estate agent to help you through the process, I can help you out. In the description below is a link to my calendar. You can book me for an appointment and I'm going to get you set up with the perfect agent in your market. Now, since you've made it this far in the video, you obviously love learning about real estate, so why don't you do me a favor? Hit that subscribe for me, hit the like button if you haven't already, leave a comment below because I love chatting with you guys in the comments section below. And as always, thanks very much for watching.